Peter Rose, Longwood Currency Trading. Good morning. It's February cold morning, and we're getting ready for a snowstorm coming. I don't know whether you can see out the window and see out to the rock wall that's out there, but it's just starting to spit a little bit of snow. And so I'm thinking about this because I'm wondering, gee, should I go out and lug in some more wood for the wood stove, or just sit here and record a stupid video? Well, I opted for the video because I'm enjoying my coffee and just looking at it out there. I would prefer not to go into it right now. There's a problem with sharing trading thoughts to other folks, and it has to do with well, you know, the last couple of videos that I've done have had to do with the psychology, the bad parts and the good parts of psychology of trading. And this isn't so much a psychological issue as it is one of perception and patience and the purpose of your trading. And I don't mean to mislead anybody with, you know, my view of the market, because it's certainly different probably than 90% of the folks that would be watching my videos. I don't have to trade because I'm retired as a real estate investor, so I have got my money and I'm all set. And so I can have patience maybe over some things and tolerance over losses, and experiment and do things that are finding my way through, rather than the immediate need that most folks might have and say, well, look, I'm 25 years old or I'm 40 years old and I can't afford to lose anything to experiment and figure out what the fuck I'm supposed to do so that I can make money. And I can't take this stuff as cavalierly as I do, as Peter Rose does, because it's dead serious for me. Well, look, it's dead serious for me too, but it's only money. Now, yes, it's easy for me to say that, but if you don't say that, then when you lose in trading, you take it personally. It's something about you that you can't do it, you know. And when you win, you feel guilty sometimes because maybe you really don't understand what's going on, or you don't have a really good set of rules, and so you think, well, man, maybe I got lucky. And it's all this self-doubt, and it's the old hope, fear, greed syndrome that we fall into as traders, where we're not in it to play a video game, we're in it to make money. The raw fact of it is that if you got a $3,000 account, you're not going to make any money. Well, you know, I mean, you may double, let's say you double that $3,000 account in a year. I mean, does that change your lifestyle? If you could double that $3,000 account in 6 months, would it change your lifestyle? No, it wouldn't, because if you're able to come up with $3,000, you're not living in a fucking tent, okay? You got a job and you're working through, and you got $3,000 to work with, and the money that you use for any investment, whether it's real estate or currency trading or old tires or whatever it is that you're doing, it's got to be disposable money. You got to figure, well, I'm going to buy this thing, and I hope somebody can sell it for more than I bought it for. But I have to have the resources that if nobody buys it, I can sit on it until somebody does want to buy it. And so the problem with most out there is that you're not trading with a $1,000 account or a $3,000 account because you're trying to learn your skills. You're trying to run that to $20,000. And you know, you see some guys out there that can take small accounts and they can increase those in 3 months. They can double or triple them, quadruple them. and it's relatively easy. Well, I have to say it's relatively easy. I mean, I took a $5,000 account and doubled it in 4.5, 5 months, something like that. But I took a $50,000 or a $40,000 account and wiped out with that. Of course, I did that first. double the account. Well, I think that working with the smaller accounts, as long as you have the right mindset toward the value of the dollars that you're accomplishing, that it's easier to grow those accounts until they get to the point where the money becomes significant. And then your emotions kick in. You take a $1,000 account, you make $20 a day. It's a pizza, you don't really care, and so you're taking the folks that are experienced and really know what they're doing are taking 5%, 8% risks on a trade. And you know as well as I do that the best practices, and it's the best practices for a reason, 2%. You don't want to lose more than 2%. And then you have to compound. You reverse compound that. You can't just say, oh, I'm going to take I've got a $1,000 bank, so my 2% risk is $20, and so I'll lose $20, and then I'll risk to 2% of the original 1,000. No, it's you got to risk, significantly less than that. You're down to, you have to reduce the amount of your bank, whatever that level is, take 2% of that. So, because it is just pizza, you can take those 5 and 8%, sometimes 10% risks, and because you're detached from the monetary value, you tend to do more logical things. You're trading for the pips, or that's what hopefully you're doing. You're trading for the pips, and so therefore you're careful in the execution of your rules. Yeah. But when you get that account up to $3,000 or $5,000 or working with a $20,000 account, all of a sudden you're talking real money, because you can, on a $25,000, $30,000 account, you can make a couple $100 a day. So you have to, a couple $100 a day, that's a lot of pizza, that's a lot of beer, that's a lot of. I mean, in some parts, a couple $100 a day is, divide, a couple $100 a day, 10 hours a day, $20, an hour, or $18 an hour. That's, well, let's call it $40,000 a year. If you're doing that sort of money. So that's significant. I mean, that's the grocery bill, or certainly a lighter heat bill that you can make on that, even if you're only doing $400 or $500 a month. I mean, if you're making $25,000 or $30,000 a year, and you're making an extra $500 or $600 a month in your trading, that's significant. And your boss isn't going to give you that as a raise. I mean, take the $500 a month and divide it by the $20,000 account, and it's a big percentage gain, of your salary on a yearly basis. So he's not going to give you that as a raise. So it becomes the more significant. I guess what I'm trying to say is that the more significant that the money becomes for you, the more your emotions begin to take hold, and it changes things. So it's, 10 o'clock in the morning right now. I went in this morning, got up, took a shower, and went in, opened the trading platform up, and price broke above a major resistance point, significantly broke above it. Those things tend to retract back to that area before they continue in their direction. If they're going to continue, if it's a real breakout, many times it falls below that. It's a false break. I'm not going to play that. I just shut the trading platform off. I don't want to be lulled into thinking I'm going to trade that. I want to see what's going to happen. And so because I'm not trading for the same reasons, I'm not going to look for a trade to make. And I've done a lot of videos on that called an anticipatory trade. Well, I think this is going to happen. I'll put an order here, and that never works out. But for the most part, if you're a beginner trader and you're learning this stuff and you're going through it and you see that price break above that resistance line, you're going to say, wow, that's going to be a breakout. I'm going to watch that, and you're going to find it. You know, if you're carrying a hammer around with you, you're looking for a nail. And so if you're not, and I hate to say not disciplined, because it's not that you're not disciplined. I'm a really disciplined person, but I get so screwed up when I slip off the edge and I start looking at the dollar value of the trade as opposed to it's just number of pips. I could do that when I'm playing poker because I play with chips instead of cash. It's one of the most difficult transitions that you're going to face in your trading, and this is from someone that's got some money, doesn't have to rely on the trading, and is still encumbered emotionally by those dollar values. I'm trying to make, I've been very honest with everybody. I screwed things up back in 2018. I lost my first real large account. I mean, I've been studying this stuff since 2007, and it's 2021 now. And started trading mini accounts in 2012, wiped out 2 of those and rethought things, and then in 2017 or 18 or something like that, I forget what it was such a traumatic time for me. I funded a large account with $40,000 and proceeded to lose all of that in a relatively short period of time. So I know, and I'm disciplined, and I know the importance of rules, and I know how your psychology affects you and stuff, but it's so easy to slip over and not think about the dollars and just trade by the pips. It's so hard to do that because the trading platform has the dollar value going boom, 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 banging at you. Even though I have the pip value next to it, it's so enticing to say, oh, geez, I made $200, I made $600. I lost $300. Oh, shit, I ought to get out. It's very hard not to think that way. The only solution that I've had for that is by setting profit target, going into the trade, setting my risk, and having a cup of coffee and forgetting about it. Because I'm a day trader, my expectation is that I'm going to trade anywhere from 1 to maybe 10 or 20 times that day. It just depends on how active the market is, how volatile it is, where it stands, and where the price stands in relationship to the support and resistance zones. All those characteristics. I can't teach you about it. I can, on a video, I have to kind of be with somebody and try to collaborate on the things so that you get a feeling of it for yourself, because you can't do it the way that I do it. I can't do it the way somebody else does it. All I can do is caution you that you have to take the emotion out of the trading. And because I have money and I'm comfortable and I'm not looking for the currency trading to pay my heating bill or to provide me retirement security, I can look at that and go, I don't want to play that. If I sit there and watch that chart, I'm gonna do an anticipatory trade. I'm gonna try something, and so I not only walk away. That's why I'm in the kitchen doing this video right now, because the trading platform is off, and I came in to get another cup of coffee, and I brought the camera in with me because I don't want to look at the friggin' chart. I don't want to look at the screen. I don't want to see that the price, which had poked up above that resistance line, has now fallen a little bit below that. I don't want to go in there and speculate on whether that's a false break or whether that's just a retracement and then we're going to get a good break, and I should probably put my next order up in here and then play to the next level. I don't even want to think about that. So when I go back in, I'm going to shut the trading platform down. I've got some emails from some viewers and folks that I chat with. I'm going to get back to them and chat with them a little bit. But I'm not going to be compelled to sit there and trade. But that's not the case for you. You're working a job or whatever, and you sit down at that computer, and if you miss that day, if you walk away from it that day, that might be the light bill. And so it's so difficult to learn how to trade if you're trying to do that from a book or watching dumbasses like me on the videos, or from all the shysters out there that are selling these crazy courses and stupid shit. You pay $2,000 to learn what you can learn by going to Baby Pips. Honest to God, it's just it's pathetic. And that's one reason why I don't really teach beginners. I'll counsel beginners, but I'm not going to teach them, because if you can't go out and learn the plumbing and the mechanics on your own so that you can understand the need of looking at strategic approach to trading, the tactical approaches, the tools that are available to implement the tactics, a little bit of an understanding of the economic diversity between the two parent countries and what that does to interest rates and trade that affect the economies of the countries. You're not trading to be you're not learning to be a fundamental trader, but if you don't know that England is going through the Brexit thing, and they're having all kinds of crises, and the United States is inflating their asset classes because of the deflationary pressure on the dollar, because of all the stimulus money that we're printing for the coronavirus issues that are out there, and all the people that are suffering because of that. Well, you got to help those people out, but by the more money you put in there, the more the other countries say, dollar isn't worth anything. And so if you look at the DXY, the dollar, it's going down. It was, I don't know, 93 or 4 or something like that, and it's down at 90.1 or something, I don't know, 5. It'll probably go below 90 here pretty soon. But if you're not aware, and you don't have to study that stuff. There's so many people out there that say, well, you got to learn this. You don't have to learn it. You just read the news. If you're not interested in reading the news, if you're not interested in a little bit of economic understanding of what the different countries are doing and how that affects the price action, and why certain indicators are going to show you certain things about what that price action is doing on a lagged basis, because all indicators are averaged out over past action. They have nothing to do with what's going on right now. And when do you use an indicator? And how do you use it? You certainly don't use it for trade entry. If anybody is trying to teach you using indicators in trade entry, you run from them like crazy, because they don't know what the fuck they're doing. Oh man, there's just so much out there. But you have to take it little steps at a time. And you have to have somebody out there to lay that out for you. Don't just pick up a book on how to trade, because that isn't how to trade. That's what you do after you know how to trade. The difficulty is learn how to get there. That's the problem. And the biggest difficulty you're going to run into is when you go from that little account and disciplining yourself. No, I'm not going to take this $1,000 account and run it to $10,000. No, I'm not going to take this $3,000 account and run it to $10,000 or $12,000. You can watch other people, but they're really, really experienced, and they're taking 5 and 8% risks on those small amounts of money, and they're able to have great gains on that. But they know what they're doing. I can't do that with those little accounts. Well, I did it with a $5,000 account, but for some reason, I'm drinking real good red wine, and the coffee was flowing good, and everything was pumping, and I was disciplined, and I followed my rules. Are you going to be able to follow your rules? I mean, I don't know. Do you even have rules? See, that's the point. That's the problem. That's the point. So those are the problems with learning a mature approach to trading, so that you can flourish at the lower dollar levels of your account, and get out of that what you're supposed to get out of it, which is not paying the light bill. It's part of your education, and you have to have somebody guiding you that understands how to move you in that direction, to put those pieces together for you, so that you're not just reading a book that says, well, now you can do this and now you do that and you work on this fucking bat pattern and blah 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 blah, and it's just craziness. Because once you get up into the larger amounts of money, which is the issues that I'm going through, as experienced as I am in this stuff, I'm going from the smaller minis to now trading full lot positions. It's the same thing, but when the minis, the dollar didn't count, so I had to focus on the pips, and it's very difficult to look at a mini account and see that a 10 pip move against you is 1% on $1,000 account at $10. Yeah. Well, if you take a 10 pip move on a $30,000 account, it's $300. You can't look at it that way because it's just the same. It's the same percent. It's the same number of pips. And if you get wrapped up in that difference, and you will get wrapped up in that difference, if you're fortunate enough to make it out of the trading the smaller accounts and then moving up into the larger account. I mean, moving into a $10,000 account. Who the fuck has $10,000 to put into this stuff? That's a big risk. You don't want to risk that. I'm a pretty smart guy, and I went through $40,000. I didn't know what I was doing. I didn't have a good rule set. I didn't understand the concepts of price action as opposed to all these fucking indicators that everybody is talking about. Nobody was there to say, hey, start with $1,000, lose that 2 or 3 times, learn the craft, and then you can go on from there. I started with a couple of mini accounts. It didn't work out. I went back to the stupid, I'm a computer engineer, so I went back and wrote computer simulation applications and ran through it that way and thought I had it all set. Well, that's fine, but the computer doesn't have any emotion. When you put $40,000 on the line, and all of a sudden your roids go like that, when the price goes against you and you freeze and you don't get out, and all of a sudden the position has cost you $12,000, you got to really stop and wonder what you're doing. And the problem that I had with that is that I understand probability, and I thought, well, okay, I lose $4,000 or $5,000. I have the expectation that I could lose that 3 or 4 times in a row, but then the odds will turn in my favor and everything will work out okay. Well, they're going to work out okay if you got good rules. I didn't have any good rules because I didn't have anybody teach me this stuff. I'm looking at fucking books and watching these stupid videos and thinking that the stuff that I was hearing on the videos and reading in the books was similar to what my computer simulation stuff was doing. So coming out of the simulated market, doing all this research and moving that into real market, I'm still struggling with that now. Because I'm just starting out. I funded my account. I sold my last piece of real estate, and so I can have a big account. A lot of that money is still sitting in the bank. It's there. It's allocated for the account, but I'm going to gradually work my way up. But I've been losing more than I've been winning because I haven't quite made that transition from the $3,000 account level to the larger account level, from minis to trading the full lots. This is tough stuff. It's not easy. It is simple, but it becomes inordinately difficult if you don't understand the difference between trading for pips and trading for dollars, and the emotional impact between those two things. So, I don't know, just a rant for you so that you've got something to think about. And I know you got questions. Who are you going to go to ask questions? Well, look for the answers in the books that you're reading. Look for the answers to those questions in the videos that you're watching, or find somebody that makes sense to you and pay them whatever amount of money that they want, because it's worth it. It'll save you a lot of money in the long run. And look, when I was starting out, I did take a course. I didn't have contact with the person, but I did take a course with one of the better traders in the country, and I just couldn't. I couldn't follow his system. And if I had a system and put it out there, you wouldn't be able to follow it either, because you can't follow a system. It has to be broken down in a different way. I'm an expert at writing and describing things and abstracting out key elements, because I spent 33 years as a computer software engineer writing complex business application. So I know how to write this stuff out. I know how to phrase this stuff. So and I can see how difficult it is to do that, and how difficult it is for these people that are producing courses or writing books or even doing the videos. They're standing up in front of the whiteboards and they're going blah, 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 blah. You're going to make 50 pips a day, and you do the blah, blah, blah. And it's not going to work for you. It's entertaining, and it certainly will support your own personal education, but do not try to replicate what somebody else does, because you won't be able to do it. Develop your own system, your own methodology. Have reliance on that, because you've done the work necessary in order to give you that confidence, and trade your system. And then if you go and you're going to share that with somebody, and you're going to teach somebody how to trade, don't teach them your system. Teach them how they can develop their own system. Okay? All right. I'm going to finish my coffee. I guess I better get out there and pull in some wood before it starts to snow. Peter Rose, Longwood Currency Trading. Have a great day, and have a great trading day.